Hello, guys. So today we want to talk about order blocks. Now, order blocks are basically zones where big institutions like banks and hedge funds place their trades. Okay. These zones indicate potential reversals or strong continuations in the market. Now, when we are able to spot them, it gives us an edge over basically up to like 90% of other Forex traders. Okay. So now let's try to identify order blocks. Now, have a look at this particular move down here. Okay. The last green candle and the wick. The last green candle, which is this. Okay. The last green candle and the wick that is responsible for this turning point. Okay. Is what we call the order block. So that is our bearish order block. Okay. Okay. So the market came here, consolidated for a while. Okay. Consolidated for a while, and then we want to check out the next order block we're supposed to pay attention to. Now, this is another order block, the last green candle that's responsible for this drop here. Okay, this is it. The last green candle and the wick. Okay, so that's what we call our order block. The point we're trying to make is for another block, whenever price moves back to an order block, it tends to react. Now we're going to be seeing all that in a short while. However, this is our order block. Now price did what? So that's a bearish order block. Price came there and then reacted downwards. Okay. So now let's look at the bullish aspect of it. If you notice, we have this big move upwards. Okay. Now, what's the candle that's responsible for that big move upward? So for a bullish order block, it is the last red candle, okay? The last red candle and the wicks that are responsible for the movement. That's what we call our order block. Okay. I hope it's clear enough. Now I'm gonna go to another place again. We also have this move here. Okay. So we have this move here. Now have a look. This is the red candle and the wicks. Okay, that's the last red candle and the wicks that are responsible for this movement upwards. Okay, so that's what we call our bullish order block. Now, I'm going to explain something to you. Whenever price moves to an order block or moves away from another block, it comes back and reacts most of the times. Okay, so this is actually the 4-hour time frame. So I'm going to move over to a lower time frame so you can get to see some of these reactions that we've been talking about. So this is the spot on the H4 time frame. This is a 1-hour time frame though. But then I want to move to the 15 minutes time frame. Notice that we marked our order block already. Okay. And then what happened? As price moved away from that zone, okay, it came back there. Can you see that? It came back there and reacted. So that is it. We just had to trade away from that order block. Okay. I'm going to be showing you how you do all of this, but I just need you to understand the concept of order block properly, first of all. So that's that. Now we also add this order block that we marked here on the H4 time frame. Okay. What happened? Remember, I said order blocks are not lines, they are zones. Now, what happened? As soon as markets moved away from there, it came back. So the point is the market would always come back to the order block. So can you see the market came back to the zone, came back to the order block, and then dropped from there. Okay, so let's move away again. Let's check out. Let's check out another one. Okay, now this is for our bullish order block from what we marked. Okay, on what we marked. Let me see. Yeah. So from what we marked, you see, market moved away from there. However, it came back. It came back. Okay. Market came back to react on this other block and then did what? Traded away again, continued its rise. Okay. So other blocks are special points in the markets that we can always, with a proper understanding of it, we can learn to take our trades from there. Okay. Now, we also mark this other block. Look at it here on the 4-hour time frame. Now, let me move my marker there. On the 4-hour time frame, we marked this, and what happened? Let me go to the 15 minutes time frame. Yes. So you see the zone that we marked as our order block. What happened? Market price came back, okay, to that zone and then did what? Traded away from that zone. Okay, so this is very important for us, okay, because we know that with this, we can have an idea how to place our trades and all of that. Now, once I'm able to spot an order block, okay, on the larger time frame, all I need to do is to ensure that I trade in line with the order block, and that's what we call order flow. Okay, so I need to trade with the flow, and that's basically, in the popular terms, is called trading in line with the trend. Okay, so this order block gave us a what? A bearish order flow. So that is what we also call, this gave us a bearish trend. Okay. So you have no business. Once you are able to spot a bearish order block, you have no business whatsoever trying to buy. Okay. To take a long trade, you all just need to look out for sell setups. Okay. So we're going to be talking about how to get all of that shortly. Now, I want to talk about what we call a breaker. What we call a breaker. Now, the concept of breakers is what is going to give us an idea. The knowledge is what's going to help us understand the points or the times where market tends to reverse. Okay. Now, look at this big move. Look at this big move. I'm going to still take it that this is one order block. Of course, that's a lower high. Okay. This is also another lower high. This is another lower high. So I'm just marking up all the other blocks I'm seeing on the way. This is another lower high. And yeah, and this is another lower high. So please pay keen attention so you understand, because this is the game changer for you. Now, these are other blocks on the way, okay, down to this point. Okay, however, what happened? Now, I'm going to take this off because before, prior to these moves, we probably didn't have, this is a bullish order block. This is a bullish order block, but prior to this move, we didn't know that we're going to be having something like that. So I'm going to take that off. All right. Now, since as the market kept moving, dropping, something happened. This last order block, please pay keen attention. This last order block, this particular order block that dropped or pushed the market down to this point. Okay. As soon as it pushed the market to this point, as soon as it pushed the market to this point, what happened? Price moved back and broke the order block. Okay. So whenever price breaks an order block, then you should start preparing for a reversal. That's simply what it means. You should start looking out for a reversal. So what is the candle that broke that particular order block? So we're going to look at that candle. As you can see, this is the candle that broke that order block. These are the candles that broke that order block. Okay. So when an order block is broken, okay, we wait for price to come back to that point and react. Then that makes us understand that our flow has been switched. Do you understand what I'm saying? For example, now I'm going to drop over to the lower time frame, so you're going to get to see this clearly. For the records, I'm on the 4-hour time frame. So that's my marker. Yep. So look at what happened. As soon as that order block was broken, okay, what happened? Price dropped down again, okay, and tried to react to that particular zone. Okay, so it gave us different opportunities to understand that it's time to take a buy. Because have a look at this. This is the last order block. This is the last candle from the smaller time frame, and it was broken. Okay, but price still dropped down to give us an opportunity to still take a buy trade from that zone and moved up. Also, we still had another opportunity again. Price came back, played around the zone again, and continued. So that is it. Now, once you're able to get your breaker, okay, once you're able to spot your breaker, the next thing you should start doing is to put out what we call your source. So we call this order block the source. Okay. So this is the order block that's responsible for that push up. Do not get confused. You only get your source once you've gotten your breaker. Do you understand? So what happened? This candle broke this order block. Okay. This candle, they broke this order block. And as soon as it broke, then we look out for the order block that led to that breakage. Okay. That pushed market that way to cause that breakage. So this is our first bullish order block, and the first bullish order block becomes our source. Now, in this case, this is our source because it is the first bearish order block that led to this move. Now, in BTMM, we call that what? Our peak. Okay. However, we're dealing with another concept here. So we call this our source. Okay. So as market continued to move up, what happened is it came back, tested the zone, and moved up. Okay. Now, market still came back to the source, which is the order block again. So, next the bullish order flow. Okay. So with this, now we know that our mind has to switch from buying, from selling to what? Buying. Okay. So that's that. So I'm going to mark the order blocks on the way. So this is one. Now we have the last red candle before the big move upward. So this is it, including the wicks. Okay, so this is another bullish order block. Sorry. So this is another order block, another bullish order block. Okay. So now, as soon as I got to this point, okay, what happened to the market? As soon as we got to this point, what happened to in the market? Now you notice something. Price went up a little bit, and then did what? Price dropped and broke this order block. Now, as soon as price breaks an order block, remember what I said. All you need to do is to hold on for price to move back to that zone. Okay. The first thing actually, as soon as price breaks an order block, the first thing you look at is mark your breaker, mark your breaker. So this becomes the breaker, okay? The candle that broke the order block becomes your breaker. Then what's the next thing you're supposed to do? You mark your source, okay? That means this becomes the next what? Order block. This is the new order block, sorry. So it is now our bearish order block. So I remember what I said. As soon as price hits an order block, it reacts. So all we need to do is, since we have our breaker and we have our what? Source, we wait for price to move back to the source, okay? And then we get a flow. So notice what price did. Price retraced back to this order block, which happens to be our source, okay? And what happened? The price is what? Dropped. This is simple stuff, guys. And this is what a lot of people trade with, that you see them always posting online, my trades and all that. It's just simple stuff, guys. Just very simple stuff. Okay, so price got back here and then it was dropped. Now, notice, so that means our buyers have done what? Our buyers are switched. We've switched our buyers, of course, on a temporary basis though, but then I'm going to show you exactly how all this kept playing out, okay? So we've shifted our buyers. Now we have what? We have our source, okay? And then after this drop, there was a bit of a consolidation here. So for this particular move, this is our order block. This is our order block. And what happened? Price dropped to this point. Okay. Of course, I take my analysis on the H4 time frame, and then I go to the 15 minutes and the 5 minutes and use them as my strike zone. Okay. So they're going to see a lot of opportunities to enter the market on the 15 minutes time frame. But just understand the concept, what I'm trying to teach you here. So this is the order block, okay, responsible for this move up, this move down, sorry. This is the last green candle and the wick, okay, that led to this drop, okay. So that's that. But now note something again. What happened? Market did what? Broke this particular order block. As soon as market broke the order block, what do we do? Remember what I said. As soon as market breaks an order block, firstly, you mark your breaker. This is our breaker. Okay. That's the candle that broke the order block. So we'll call that the breaker. Okay. That's the candle that broke the order block. So we'll call that the breaker. Then what happened? As soon as you mark your breaker, remember what I said, you go down to mark your source. So we have a new source now, okay? And once you've gotten a new source, of course, remember the source is an order block, right? So the last red candle and the wicks, okay? That's our order block. So you go down and mark your source. Now, once you've gotten a breaker and a source, it simply means that your flow is changing. That's all. That's simply what it means. Your order flow is changing. Okay. So notice what happened. All we just need to do after having our breaker and our source, we just need to wait for price to come back to the source. Okay. And try to react around that zone for a move upward. And that's exactly what happened here. So simple stuff, guys. The market dropped, it was reacted. If you notice, that's the zone. Okay. That's the zone, reacted, and then moved upward, okay? But of course, we can go over to the smaller time frame to understand properly how we take trades in this, using this particular strategy. This is very simple, okay? We can do this in a lot of other time frames, okay? I want to come to switch to this point to give you this same explanation, okay? Okay, so now notice what happened. This is an order block. This is a bearish order block. Okay, now what happened? Price dropped a little bit, came back, retested this order block and dropped, right? It dropped. So, of course, so this is a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, just like that. Price kept reacting that way. So it keeps coming to the other blocks that are being created, reacts on them, at them, and then drop, reacts at them and then drop. So just have a look at the points where the order flow switched. So that, because there's one thing a lot of us do as traders, is a very big mistake, because we make our analysis, we say, okay, I expect that the market is going to be on the buy, on the bullish run. And then for one reason or the other, okay, you enter the trade and the market hits your stop loss. Now you're supposed to sit back and try to reanalyze again, reanalyze the market to be sure what exactly happened, what transpired, why did the trade hit my stop loss? Why did the market hit my stop loss? But most of us will still be glued to bias, and that's really bad. Okay, because that's how a lot of us end up blowing our accounts. Sometimes you're not sensitive enough to understanding that the flow of the market has changed. That is, the trend has changed. Okay, so with this trading strategy, okay, you don't have anything to argue. It's just looking at you. It's very clear. Okay, so as soon as the market switches, you know. Now, have a look at this. This is the last green candle. Okay, so this is the last green candle that's responsible for this drop down, right? So that's our order block. Okay, that's our bearish order block. Now, what happened? As soon as the market dropped, you'll notice something. Market moved up and broke this order block. So let's say you took a sell. You took a sell, and of course, once the market moves 1-2 candles in the H4 time frame, you should be able to move your stop loss to break even, and or even 1%. Okay, so you're not even supposed to take a loss in this particular trade. But let's say you took a loss, the market dropped and then broke this particular order block, okay, where you actually had an entry. Then you should know that as soon as market breaks the order block, what we call this, the particular candle that led to that breakage, okay, we call it a what? We call it a breaker. We call that our breaker. So this is our breaker. Now, remember also what I said, that once you get a breaker, it simply means that you can now mark your new order block, which is called the source. Okay, which is called the source. So now this is a new order block, a bearish order block, the last red candle before the upward move. As soon as you get your breaker and your source, it means your mind has got to shift from entering sell positions to entering long positions. So all we need to wait for is what? For the market to drop down to the source and try to react. And that's all. Very simple stuff, guys. Now, notice what happened. The market dropped to this zone. As you can see, market dropped to this zone and did what? React around there, and boom, see the market going up. Okay, very, very simple stuff, guys. Very, very simple stuff. This is what happens all the time in the market. It happens all the time in the market. So now let's say you're even taking a trade using the H4 time frame. All you need to do once you notice the market drops to this point, is all you need to do is to take your entry. Okay, once you place in your entry, then you put your stop loss just below the last candle, just below the order block there, and the price will definitely not get to that point. Okay, so that's that. However, I'm going to still show you how to take your trades in the lower time frame so that you maximize your risk to reward ratio. Okay, so that you can use smaller risk and then have a good or a large outcome on it. So that's it, guys. That's what I wanted to share with you guys today. And I'll see you in the next video. I hope you learned something today. So if you enjoyed today's lesson, please hit the like button, give the video a thumbs up, hit the subscribe button if you're new to this channel, and don't forget to share the video with your friends that are also in your trading community. Okay, and yeah, I'll see you in the next video. Thank you.